Hello, everybody. Welcome to the Fundamental Analysis webinar with AvaTrade. My name is Troy. I'll be presenting. As we're getting started, let's just do a quick systems check. If you would, type OK if you're hearing me clearly and seeing my screen all right. There's a little chat box there you can use. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that no one trade is guaranteed to bring you profits. With each trade that you take, there's obviously risk involved. So in one way or another, you want to manage risk. And we have some tools on our WebTrader and AvaTrade Go app that make managing risk quite a bit easier. Calculation tools within the order window, AvaProtect, some special features that can assist you with your risk management plan. And we'll go through some of those features as we go through some simulated trade ideas. And also keep in mind that what we go over is not meant to be financial advisement, but it's coming from an educational perspective. Now, real quick before we get on the live charts and start looking at the news that's coming in, for anyone who's new to things, what is fundamental analysis? Basically, it's looking at the news and trying to understand how that news might affect the price movements on particular instruments that you might be interested in trading on. And so we can look at different types of news. So it could be regularly scheduled economic events, like on an economic calendar. And we'll take a look at some that have come in yesterday and that will be coming in today to see what was the effect and what might be the effect moving forward, and go through some strategy ideas on how you might trade around those economic announcements. And if you haven't used our economic calendar, it's quite advanced, and it gives you some data crunching tools that really make announcement trading data-based and data-driven, rather than using your emotions to decide which way you think a movement will go as the results come in. And then other types of fundamental news could be extraordinary headlines or events. Potential larger regional conflict breaking out in the Middle East could be an example of an extraordinary event that could occur. Certainly the war up to this point was an extraordinary event, and we could give other examples of things that could move the prices of certain instruments when the global pandemic was occurring. That certainly was an example of something that was extraordinary, and each headline that hit moved instruments in different directions depending on what the headline said. And there's no way to plan for that in terms of what the information will be, but you can plan for it on the charts with uniquely placed pending orders, typically beyond important price levels that if reached, you think there must have been big news. There are ways to go after taking advantage of this extraordinary news, even if you don't know what it will be or when it might come. Right now, I would be leaning towards maybe crude oil, the energy sector, maybe being affected largely if a greater regional conflict breaks out in the Middle East. If Iran and Israel get into it more directly, if it spreads beyond where it is now, there could be supply disruptions with the shipping industry, with the ability for crude oil to get out to the global market from different regions of the world. So this is something that you can plan for and start to put maybe pending orders beyond important price levels, that if big news does hit, perhaps if it trips the price on your pending order, that's confirmation that there's momentum in a certain direction. And so we can go through some ideas. Maybe we'll pull up crude oil as an example to take a look at some price levels and where you might put some strategic pending orders perhaps. But that's just another type of fundamental news, extraordinary headlines, whether it's about pandemics or war, or in the past also Brexit was a big topic a while back. I know we've all kind of moved past that as the driving headlines, but it once was the big news of the week, of the month, ongoing as well. So that in a nutshell is fundamental analysis, using different types of news and events that are coming out to try and help you predict which way you think price movements will go on whatever it is you're trading on. And so as we move along, if you have any questions, let me know. If you'd like me to share some information that's related to what we're talking about, also let me know. From our main website, you have access to our web trader by logging in here in the upper right-hand corner. The web trader allows you to trade on both your MT4 and MT5 accounts. So from one place, you can switch between those, and from live account and demo account as well. It's all available from the web trader. And also our AvaTrade Go mobile app, you'll notice, has the same functionalities as our web trader. So as we go over different tools within the web trader today, you'll see those same tools in our mobile app, okay? So if we log in here, we'll be in the web trader, which looks like this. And what we can do then from a fundamental perspective is kind of pick our categories maybe that we want to look at. And so while keeping in mind the general idea that, you know, there's some fear on the markets regarding inflation and there's some fear on the markets regarding war, then we go into some specific events maybe with that in the background to see which way might some movements go with new information that comes in. So if we go to the discovery section, we can find some different tools that we can use. We'll take a look at the market buzz too, I think, to look at an example or two, and the economic calendar. Those are the main, there's a news feed as well here, news. If you click on this, it has a news feed that you can use as well for up-to-date information. And so those three areas are the main fundamental news sections. Now, from the economic calendar, first, it would make sense to look at yesterday. If you saw the huge market moves yesterday, they were related largely to the US core inflation data and inflation rate data that came out. So the expectation, we talked about this Tuesday, by the way, in my Tuesday session, that this was coming up. And the expectation was that inflation was not going to drop year over year. You see, the prior reading was 3.2% inflation. The expected column was 3.4. And we talked about the fact that that was creating fear. And we already saw leading up to that announcement, the markets being jittery, volatility index was up, the equities had bearish pressure on them. And so when that number came in, and we had talked about this Tuesday in my session, like I said, if it's higher than expected, or even if it was as expected, it's showing an increase in inflation at a time where interest rates were raised 10, 11 times over the past year and a half to try and bring down inflation, which it has. But now, as it's gotten down around 3.5%, it's had trouble dropping any further. It hasn't dipped under 3%, and really the target rate is around 2.5% that the folks deciding monetary policy in the US would like to see. And so if it had come in at expectation 3.4, that was already an increase and was creating fear on the markets that interest rates can't come down anytime soon if inflation is not only not dropping but rising. Okay, and you know the whole idea about high interest rates is just not good for business. You can't expand your business with business loans as cheap. It costs you more to bring in capital, to bring in money from loans. Small business loans, car loans, home loans, you go through all kinds of sectors of the economy, and high interest rates aren't really good for business and prosperity, unless you're a bank maybe. And so what we see here then is with this data coming in higher than expected, it's the realization that the US just can't lower interest rates yet. The inflation has not come down. The point of raising the interest rates was to bring down inflation. And so, yeah, it's not at 10% anymore, but it certainly is not at 2 or 2.5% either, okay? And the fact that it jumped from 3.2 to 3.5, what is that, like a 8% increase? That's not a small amount. 0.3 compared to 3 would be a 10% jump, right? It went up 0.3 from 3.2, so it's something less than a 10% over, month from the last reading to this reading, and higher than the expected increase. So not good news for those hoping that inflation would be coming down. And you can see that straight across the board. The core inflation rate also, which factors out the more volatile items, food and energy, even with those factored out, inflation did not come down. It was expected to maybe drop when we factored out the more volatile items from 3.8 to 3.7, but even that didn't drop. It stayed at 3.8, even with factoring out, the cost at the pump and the grocery store, which are the items that went up the most. You factor those out, you still didn't get a decrease in inflation, okay, with the core inflation rate. And we can look month over month as well. It was expected to drop month over month, did not drop. 0.4, 0.4. And the year over year rate went up nearly 10%, okay, from 3.2 to 3.5. So that caused a huge movement in the market. And how could you have traded on this? Okay, you say, well, I didn't know whether it would come in above or below expectation. If I would have traded before the numbers came in, I'd only be guessing. Had it come in lower than expected, all the moves probably would have went up. Equities would have went flying up. The euro would have went flying up against the USD. As it is, it came in higher than expected, and the euro went crashing down against the USD. So did the pound, and so did the major indices and stocks. So the answer to that conundrum is you don't have to guess ahead of time. You can use this tool, and I can show you very easily. This was the movement with yesterday's announcement. It's already factored in. But even without this one, if this comes in above forecast, inflation rate above forecast, 75% of the time, the movement went down over 70 pips. And that's after 4 hours. In the first 5 minutes, it's only moved 23 pips. Okay? 23 pip range movement in the first 5 minutes, which means you could still get your trade off. And then after 4 hours, we're talking over 70 pip range movement. All right. So, and if it would have come in below forecast, it's the opposite. 2/3 of the time it went up, and the downward movements were very small in the past. So based on how this data came in, you could have already predicted, based on data analysis, which way you thought it was more likely to go. And in fact, you could have saw the numbers come in, and even in the first 5 minutes, if you got your trade off, it hasn't moved the full distance yet. Okay, go above forecast as it came in. It only ranged 23 pips in the first 5 minutes. After 4 hours, 70 pips. Okay, so this is how easy you can trade on economic announcements. To understand how has it moved in the past based on how the numbers come in, and if they come in that way, and you can get the entry point that makes sense to you based on the range of movement from the past movements, then you can make the move. And this would have been an easy win on this particular trade, on really any of those USD currency pairings. Okay, and you could go through the different currency pairings here. Okay, huge move down. If we go above forecast, huge moves down. GBP USD, same thing, downward movement, over 100 pips, range movement down when this comes in above forecast. Okay, so we can see that there are trends based on how this information comes in. All right, now you can also look at which one has the stronger data, inflation rate year over year or core inflation rate. If we look at the core inflation rate, comes in above forecast, it was 100% of the time. And it went 141 pips on the GBP USD. Average range movement. Yesterday it went, I think, almost 200. 180 pips down in the 4 hours following. If you looked in the first 5 minutes, okay, 40 pips range movement. Okay? It didn't even drop in the first 5 minutes yesterday. And then after 4 hours, look at the movement down. So regardless of which currency pairing you end up deciding on, you go by the data from the past. And you might see that the core inflation rate has a higher percent predictability than the year over year inflation rate that includes the energy and food. So you could go through each announcement, maybe the month over month, which is at the same time. These are coming in at the same time. If it's above forecast, 2/3 of the time it dropped. If it's below forecast, 100% of the time it went up. Okay, all of these agreed with the move that actually happened yesterday. And if you'd have followed how these numbers came in and did what the data said was most likely to happen, those would have been winners. Okay, now we can go to today. Okay, the good thing about announcement trading, there's always the next announcement. Okay, so now we've got interest rate decision out of the European Union. Okay, that's not too long from now. It's coming up. Okay, the expectation is they'll keep the rate the same. I'll tell you right now, I've read articles about thinking out of the European Union, and inflation has been coming down faster than expected in the European Union. I've seen the data come in as well. Okay, whether it's CPI data, PPI data, factory production numbers, there's been a faster slowdown in the European Union than in the US. You might say, well, that's bad news. The economy's slowing down faster. It's actually good news if you're wanting interest rates to come back down, because a faster slowdown than expected means they're more likely to lower interest rates sooner then. Okay, and so that's kind of the talk right now leading up to this rate decision, that in the European Union, they might not lower the rate. They might keep it the same today. But what they say along with that is important as well. And if they're saying, hey, we do expect to be able to lower rates soon, even though we didn't this time, that could come to a point where the euro then weakens in response to that type of talk. Okay? So just understand, when interest rates go down, that makes a currency cheaper to get. You can get more of it cheaper, which means it's not as strong. Okay? The value drops. So you could see the euro have bearish pressure today if this rate comes in below expectation or even at expectation. And how do we know that? Well, let's take a look. What has happened in the past with this announcement? We could do Euro USD, we could do Euro GBP, whatever currency pairing we want. Okay, I'll leave it on Euro USD. If this comes in at expectation, if it matches the forecast, if indeed they don't raise or lower the interest rate, what has happened in the past? About 2/3 of the time, the euro drops against the USD. Okay, so the statistics are there from the past year or so, that with each rate decision, if the actual has matched the forecast, about 2/3 of the time, then the euro gives up ground to the USD. Now, if you pair that data with the fact that it's the opposite situation in the US, there's the realization that inflation is still rising and that they won't be lowering interest rates maybe anytime soon in the US, then that is more of a reason why the USD could be strong today. And it's the opposite situation in the European Union, where they certainly won't raise the interest rate today, at least we don't think so. And if this rate comes in at expectation or lower, there's reason for the euro maybe to be weak. Okay, so that supports this downward movement 63% of the time in the past, that could happen again. And if you say, well, how often does the rate match the forecast or not when they actually give the result? In this whole history, it's never come in below forecast or above forecast. They're pretty much dead on each time, that whatever's predicted, that's how it comes in. It matches the forecast each time, at least in the past year or so, right? I think if anything, they would err on the side of lowering the interest rate rather than keeping it the same, because inflation has dropped faster than expected. Okay, they want to help the economy out, maybe if things are slowing down too quickly, by lowering the interest rate maybe. So I don't anticipate this will come in above forecast. If it did, the euro would likely strengthen. But if this comes in matching forecast, which is what we would expect, or below forecast, either of those is likely to lead, based on these statistics, to the euro weakening in the 4 hours following the announcement. See, in the 4 hours after, average range movement over 86 pips. 2/3 of the time, that's downward movement, approximately 2/3 of the time. And we can look at other currency pairings, okay? Euro GBP maybe, okay? It's similar statistics, right? 63% of the time. It's almost the same percentage, if not exactly the same. And so you pick the pairing that makes most sense to you, but we see what the data shows, that likely this will come in at expectation. And if it does, the majority of the time the euro weakens against the USD, and in particular with all the fear about the US not being able to lower interest rates, that could even be a more profound effect with the euro giving up some ground maybe if these rates are held the same as expected. Okay. Now, you don't win every time, right? We're looking at percentages. So you want to try this strategy with limited risk. Look at the range movement that it's moved in the past. You know then an approximate distance to put your stop loss and your take profit. And you try these announcements maybe 10 times each over the coming year. See which ones you have the best success with, and then you zero in on those for longer term use for trading on announcements. Okay, usually it's the high level announcements, the ones that say hi, that have the larger movements. Okay, and maybe even more predictable or sustained movements after the numbers come in. Okay, then today we also have the PPI data out of the US. Again, this is inflationary data. The other one was CPI, Consumer Pricing Index. That's the prices that you and I pay at the stores. That went up more than expected. Now, what about the Producer Price Index, right? This is the price that the producers pay for the raw materials. Okay, if that goes up as well, wow, that's not good news for inflation, because the producers pass those price increases on to the consumers. So if the producer prices are up also again, then we can expect the next consumer price index reading to maybe have some upward pressure. So they're related to each other here, and they're both important when it comes to the Fed's ability in the US to eventually lower interest rates or not. So the expectation is that the producer prices actually month over month will come down from 0.6% increase to a 0.4% increase. But you see, year over year, the expectation is it's up higher. Last time it went up 1.6. This time they expect it to go up 2.1. So that's already a mixed bag in terms of expectation. That tells you there's nervousness about these numbers. It's expected to go down month over month, but still be even higher year over year. If these numbers come in higher than expected, like yesterday's did, there could be a surge of fear again hitting the markets about the Fed's ability in the US to be able to lower interest rates, meaning the fear would be that they're not going to be able to lower interest rates anytime soon if this data comes in higher than expected like yesterday's. Okay, now let's take a look at what the data tells us from the past. PPI data, if it comes in above forecast, 83% of the time, the USD strengthens and pulls the euro down. That's not a surprise, right? The fear causes people to rush into the USD because it's fear that interest rates can't be lowered. That strengthens USD even further. So, traditionally the USD strengthens when there's fear on the markets. Magnify that if it's fear about not being able to lower interest rates on the USD. In fact, that interest rates would have to stay high on the USD. If that's what's driving the fear, then that would even have a double reason why the USD might strengthen. Okay, so we see almost all red if this comes in above forecast. One little sliver of green, the one time it went the other way, it barely went the other way. And after 4 hours, we're talking nearly 50 pips of movement. And in the first 5 minutes, if you get your trade off, we're talking only 19 pips of movement. So you still had another 30 pips to go if you got your trade off in the first 5 minutes. Okay, these look like bigger lines, but if you look over here, the numbers are smaller. Okay, 20, 10, in that range. And then after 4 hours, we're talking, these are down around 40, 43, 45. Okay, much larger movements down the majority of the time. And the movements up very, very small over those 4 hours. So the ones that did spike up the first 5 minutes ended up coming down after 4 hours. Okay, so very strong statistics here. What if this comes in below forecast? What if surprisingly the producer price index shows that there's a slowdown? If it comes in below forecast, well, then the opposite. 80% of the time it goes up. Talk about a complete flip based on how those numbers come in. It's almost all green now. Only once it went down after 4 hours. So it's complete opposite expected movement. the euro climbing against the USD if indeed these numbers come in below forecast. Okay, and again, we're talking nearly 40 pips movement after 4 hours in the first 5 minutes, only 14 pips movement on average, true range movement. Okay, so it's not like the movement occurs in the first 1 minute and that's it, it's done. You have time to get the trade off, and it might not have moved much movement compared to what you would expect after 4 hours based on the past data. Okay, but you pick your entry points. Maybe you only enter if it spiked the opposite direction in the first 5 minutes compared to the direction that you expect it to go after 4 hours. So you can be selective about your entry points as well to improve the situation in terms of risk and potential profit. All right, so this data is very powerful. This is a big announcement coming up. We see how strong that percent predictability is based on the past. Okay, and so whether we're talking about the interest rate decision or the PPI data out of the US, both of them look like very strong data points to look at. And the one we were just looking at was this month over month. We can look at the year over year as well. Above forecast down, below forecast up. Okay, whether we're month over month, year over year, the same result. And what's interesting is initial jobless claims, which is also a high level announcement, but because it's occurring at the same time as the inflationary data, okay, the jobs data gives a confusing look. It doesn't matter whether this comes above forecast, it's 50-50, below forecast, almost 50-50, 43 to 57. You can't gain any knowledge about which direction this will go on the jobless claims because it's at the same time as the inflationary data. And for the past year or so, there's been more of a focus on the inflationary data than this initial jobless claims. Okay, so that's why regardless of whether this comes in above or below forecast, it's hard for that number to predict the movement percentage-wise from the past because this data is being focused on more strongly. And we can see that in the data. The one that's driving the directionality were these two, not this one in the data that we just looked at. Okay, so plenty there for you to trade on, whether it's today or examples from yesterday that you could have traded on. And then we can also look into tomorrow and you'll find more examples of high level announcements. Okay, more inflationary data here out of different countries, European Union, industrial production numbers, GDP numbers out of Great Britain, high level announcements. You can follow the same pattern, take a look, what effect do they have? What percent of the time, if these come in higher or lower than expectation or at expectation, what percent of the time does it move which direction? And you can use this to set your week up. We don't have to go through every announcement in our session, but you can use this to set up your whole week, and you could do it over the weekend. On Saturday, Sunday, when you have free time, go through all the major announcements for the upcoming week. Pick the ones that show that they maybe have the largest amount of predictability based on how the past data came in, and set your schedule for trading on those announcements potentially. Any questions on anything we just covered? I'll pause for a moment. Okay, great. I don't see any questions popping up, so I must have been clear. Let's go ahead then and look at maybe one of these other features. So again, there's a news feed here. This news feed summarizes what's happened during the day as it relates to whatever instrument or instruments that they have listed below. So this news potentially could all affect trading on, in this case, the Euro USD. And it talks about things that already happened, things that are upcoming, summarizing things for you if you don't have the time to actually go to the economic calendar or read the articles, etc. Okay, so this is a convenient feature to use, the news feed. Okay, and it gives you random instruments related to different news that has come out recently or that will be coming out recently. Now, another tool where if you have the time to read articles, you can click on the Market Buzz feature, which is also here, Market Buzz. And we can pick something that you might think could be affected. Now, we mentioned crude oil today, right? So if we want to find crude oil, then we can go by the largest bubbles, right? These are trending the most in terms of stocks. Okay. Crude oil is under commodities. These are trending the most in the commodities: gold, natural gas, and crude oil. So let's click on crude oil, since we mentioned that kind of at the start. There's some fear because of the war situation. So what's the expectation on crude oil? If we take a look here, we can see some articles that came out recently. And so, first of all, it says trend analysis, price may rise over 9%, 9.2%. So that gives you right away the feel that what we already were thinking, that there's fear about supply disruptions, that the U.S. reported they think it's imminent, that Iran is going to, maybe not from their territory, but from maybe through their proxies, wage some kind of attack beyond what's already been occurring into Israel. So there's fear about that. And the fact that the U.S. indicated they have intelligence, some sources saying that they think it's imminent, whatever that means. Doesn't mean today or tomorrow, but imminent means you would think sometime soon. There's fear on the markets, and that then this helps confirm, if you already were thinking, I think crude oil could go up, you look at the technical signal from Trading Central, and it says price may rise 9.2%. That's not a small amount, 9.2%. That's a large percent prediction to rise. It's not like they're saying they think it'll go up 1 or 2%, 9.2%. If you want to see the technical analysis on that, just click on where it says price may rise. Here's the technical analysis. They show the support level here. Okay, this blue line was resistance, resistance, resistance. Then it broke above and became support, support. And here's the price during the prediction that it will go up. If it breaks below 85.5, then they're saying that starts a downtrend. Then you'd look for further dropping towards these red lines. But as long as it's above 85.5, they're saying they think it could go up nearly 10%, 9% or so. Okay, and they give the spots where you might take profit. 93.80, 97.70, because if you go further back in time on the chart, those are resistance levels from further back in time. Okay, so they're saying you could take profit maybe in these areas based on this prediction of a rise of 9.2% plus. Okay, so the technicals are there for a rise. The fundamentals might be there for a rise. If we start to read the most recent articles, okay, we can start to look and say, here's an article, crude holding gains on increased Middle East risks. Okay, they're talking about it in this article, Middle East risks, the crude holding gains. Okay, we can go down and look for more articles, and you can read the entire article if you want as well. So let's see, firms as Middle East conflict concerns outweigh higher inventory build. So even with inventory going up, there's still fear. Prices can rise because of fears of conflict. Okay, you can click on any article. It brings up a summary of the article, and you can read the entire article. Click the link, and it takes you to the source of the article, and you can read exactly what they're talking about in full from that article. So it's an easy way here to find fundamental news about a specific instrument, and also, by the way, get a technical prediction with percentages and price levels as well to go along with it. So very, very useful tool here for finding in an efficient fashion fundamental news. Okay. I mean, you're asking what is the reference of predicted values. If you're asking where does that prediction come from, it's Trading Central. They have a team of analysts that are using all of the market data that they can find to send out these expected predicted movements. It's partially based on the technical analysis that they outlined. From a technical perspective, it looks like an uptrend with a support level below, if we're talking about that crude oil that we're looking at. And then also, obviously, they're taking into consideration the fundamentals, which also maybe supports crude oil going up. Okay. Okay, Parveen, you're asking, even if after checking the news and the information, if you're confused about things, can you open a pending order on both sides? And that's called a breakout strategy. So listen, if I'm completely confused about something, I tend not to want to trade on it. That would be my first answer. But the second part of that, can you do a breakout strategy with pending orders in both sides? Absolutely, you could do that. So if I bring up crude oil, and maybe on crude oil, let's get rid of these old lines I drew. We'll start fresh. Okay, let's go to a little larger candles, 4 hours. Okay, so if it's big enough news, certainly the move should break through the 4-hour candle support. Okay, it's headed down now, as we expect, with the the hesitancy before big announcements or big information. There can be ranging movements, and since the U.S. PPI data is coming, it would make sense that this movement could be ranging between support and resistance. So I see support and resistance like this. Okay, so if you've ever wondered what does it mean when something's ranging, this is an example. So starting from last week, it found support at this price, and it's tested it once, twice, then into this week, a third time tested this price, a fourth time tested this price, and a fifth time tested this price, and it held. And so here comes a downward move. If you think crude oil will go up, but you want a better price, you could be thinking about a pending order to buy off the support level here. Okay. Now, I mentioned when I first heard your question that you're talking about a breakout strategy. You also can do a ranging strategy until the big news comes. So I could be buying off this support level. I could put a pending order to buy from this support. So if it gets down here to buy, why would I do that? I feel like there's more upward pressure on crude oil fundamentally. Okay, fear about war in the Middle East is maybe the big one. So the other driver of energy prices yesterday showed stronger than expected economic data out of the U.S. That means there could be increased demand for energy if the economy is doing better than expected. So I can think of many fundamental reasons why I would trust this support level. So if this comes down to this support level like it did once, twice, 3 times, 4 times, 5 times, 6 times, then I'm happy to try and buy with a pending order off this support, because technically speaking, it has a support level. Fundamentally speaking, buying seems to make sense right now in crude oil. So there are a couple reasons why it might make sense to trust this support level and buy off of it. But what you asked was, if you're unsure about the direction, can you go trade in both directions? You can. Number one, you could sell from the resistance. If it gets to the resistance level, sell. If it gets to the support level, buy. That's one way that you can trade in both directions, is when it's ranging up and down. Hits the resistance, sell. Hits the support, buy. Hits the resistance, sell. Support, buy. Resistance, sell. You'd have won every time in the past few days doing that within this range. The other aspect is, if it's big enough news, remember we talked about the unexpected news, the extraordinary news, like maybe a war breaking out that expands. So that type of news that you can't predict what it'll be or maybe when it will be, I could put a pending order above the resistance, right? Above the resistance. If it breaks out of this range and hits a pending order above this resistance level, then I'm going to assume something major happened to drive up crude oil price, and I'll have a pending order to buy. Okay, so let's go to larger candles, maybe 1-day candles, and we can see it better. Okay, so looks like 1-week candles might be needed. There we are. Okay, so now I can get rid of some of these lines so it's not confusing. The ranging strategy is more short term. Until the big news comes, it's ranging between those two prices. You could have a pending order just above the support and just below the resistance and go up and down with that ranging pattern. Eventually, you'll lose on that. It will break the ranging pattern. And if it does break above this line, let's say Iran and Israel get into it more deeply in terms of war, crude oil could break above this line, that resistance that we saw in the 2-hour candles. And if it hits this line up here, I could have a pending order to buy. And you'd say, wait, you're going to wait till it goes higher, then you're going to buy? And the answer to that is, if it breaks out of the range, yes. Within the range, the pending order is selling from the high point. If it breaks past that range and the ranging pattern loses, then we're assuming there's momentum, if it breaks past the resistance, to have momentum to continue climbing further. So you have a pending order above the resistance to buy. The other side of that would be to have a pending order below the support to sell. If something unexpected happens that brings the price down and it breaks the support level that we saw in the 1-hour, 2-hour candles, you can have a pending order to sell as well. So Parveen, yes, within the ranging pattern, you can trade both directions with pending orders. And with a breakout strategy, you can trade in both directions with pending orders, meaning if it breaks the support, it'll sell. If it breaks above the resistance, you have a pending order to buy. And you just wait for the big move in terms of that. That's how a breakout strategy would work. I mean, in terms of trying to predict the data before it comes out, I can't get into that. I have no way of predicting, if that's what you mean. If you're afraid the movement is priced in before the data comes out, then you'd have to be trying to get advanced data before the general population has it. I don't have means of doing that. But what we did look at on the economic calendar is that even after you see the data come out, you still have time to take advantage of that momentum. We were looking at all those announcements we just analyzed. After 5 minutes, yeah, it already moved some, but after 4 hours, it moved further the majority of the time. So you could still take advantage of the information after you've seen it. Certainly, you can try to make predictions before the data comes out. That becomes a little more tricky in terms of knowing what the data will actually be, but yeah, you could get a better entry point if it comes out the way you thought. I would suggest if you're trying to do that sort of model with your trading strategy, if we're on, say, a currency pairing, and you're trying to preemptively sell on GBP USD because you think the PPI data will be lower than expected, or I'm sorry, higher than expected. So you think maybe the USD will strengthen and you're trying to make that prediction in advance of the data, then you might use something like AvaProtect to help you with that, okay? For a flat cost, you could protect your trade, okay, for a pretty cheap price, okay, by the hour, multiple hours, by the day, multiple days. And so you could try and take a preemptive strike before the data comes out, and you have the ability still to be protected in a unique way with AvaProtect without much of a cost. And the bigger the announcement, the more the potential profit can be, then the cost of the protection becomes kind of minuscule to what, in terms of the amount you could make if you're right when you guess. And then you also can calculate your take profit and stop loss, potential profit and potential loss, okay? If you're putting a certain price for entry point, okay, depending if you're buying or selling, as you change the price, you see how much you would make and how much you could lose, okay? So, and you could just type the price in as well, okay? So you put the price that you'd want to take profit, it immediately calculates what your profit would be. Put the stop loss price, it calculates what your risk would be. So very nice for the risk management side of things. And AvaProtect, I think, with what you're asking, could make sense with that type of strategy if you're trying to preemptively make the move before the general data is released. Very good question. Okay, I think this is a good place to stop. We've been going for, 45 minutes or so. There's some big announcements coming up today, tomorrow. So maybe you can apply some of what we went over in this session to take some trades that make sense for you. All right, everybody, thank you for joining. Till next time, good luck with your trading.